The election results are still wavy, and we're going to go and talk about the latest update for you guys as far as housing, as well as real estate update. Hope you guys are doing well. Happy Friday. Welcome back to the Kwak Brothers show. With that being said, I'm also going to give you a little training today on how to buy your first rental property, and I'll discuss why you should buy a rental property for the next recession. So with that being said, of course, Daniel is not here today again. He's actually flying out to Orlando. We are actually looking at a couple hundred units of apartment buildings to buy down there. Daniel will be out there meeting with our ground team. I'm going to call them the task force. It just sounds better. Task force. We have a Florida task force that he's meeting with. And we're looking at, again, a couple hundred units we're wanting to buy. And Daniel's down there filming. So he's going to show you what the process is of buying real estate at that level, right? If you guys want us to see the breakdown, how we're finding the deals, how we're looking for the deals, and who we're meeting to make that happen, all that will be documented through video. And we're going to show you guys through our YouTube video. So if you guys want to see those types of videos, be sure to subscribe to our channel. If you guys want the latest updates as well as some beautiful and wonderful content on how to get into real estate. So that being said, guys, I'm going to go ahead and turn my comment feed on just to see, of course, our conversation. And I got the latest updates for you guys as far as what's happening in the election. And then, like I mentioned, I'm gonna go and talk about how to buy your rental property and why you should buy a rental property from the first place. So, yeah, good morning to all of you guys. I see you guys. So, why buy real estate? Well, one of the big reasons why I actually don't invest in stocks, let's make that clear. I don't invest in stocks. I prefer real estate all the way. And the reason why, and there's really 5 main critical reasons. Number 1 is you get to generate income from real estate, right? With stocks, when you hold on to a piece of stock, really the only way, or I shouldn't say the only way, one of the main ways that you can grow your wealth is through appreciation. Or you can make money by, of course, shorting stocks and shorting certain positions. But primarily the main ways of making money in terms of long-term aspects of investing in stocks is through appreciation. Now, I'm not talking about day trading. I'm not talking about, those types of activities, because those take a lot of work. I've got friends who are day traders. They're very smart people. They do it really well, but it does take a little bit of time of learning curve and, of course, actually doing the work of making money. But what I'm strictly talking about is buying and holding stocks, right? Very, very hard to make any kind of a monthly income from holding stocks. You may argue that there are stocks that pay monthly dividends, very rare, or you may hold on to a different class of stocks that may pay you dividends every single month, but not quite like real estate, where real estate, you're pretty much guaranteed an income. It's benchmarked or hedged against the fact that someone lives there and that's their home, right? The guarantee, the chance of your income is a lot higher than, of course, some of the other ways of generating income and other investments. So that is my first reasons why I pick real estate over stocks. I love real estate for that reason. Number 2 is, of course, you get appreciation, just like stocks. When the value of the asset increases, so does my wealth, right? I can sell that asset, and therefore I've got capital gains, I got profit, and I could do that with real estate as well. Number 3 is I get depreciation. Now, depreciation is not the market term of depreciation, where in the market terminology, depreciation is simply when a price of asset goes down. The value of an asset goes down through either perceived value or through economical value, meaning supply and demand, right? If there's less demand overall for a specific asset, then of course the price of asset goes down because of the perceived market value. But what I'm talking about is an accounting terminology of depreciation. Now, with this accounting terminology, what you can do is depreciation gives you tax benefits. Now, let's say you bought a $275,000 real estate, and let's say you've been holding on to it as a rental property, for example. You could depreciate a residential property for 27 and a half years. So what that basically means is you take $275,000, divide it by 27.5 years, that gives you $10,000, right? Simple math, right? 10,000 times 27 and a half gives you $275,000. So $10,000 is what I can deduct, what I can take as far as a business write-off. I can write off $10,000 of my equity as losses when it comes to taxes. So if let's say, for example, I made, let's say $12,000 from my rental property in a year. I could take $10,000, deduct it from the $12,000. Therefore, my taxable income goes from $12,000 down to $2,000. Right? You can see how I got massive tax advantages by depreciating residential property. If you buy commercial real estate, it's now 39 years. You can depreciate it for 39 years. This is actually one of the reasons, and I talked about this in some of our other videos. This is how actually Donald Trump was able to pay significantly less taxes, because he's taking a lot of depreciation and losses on his real estate. Therefore, he's brought down to a level where he pays very little, of course, close to zero taxes. And it's a very smart thing to do. And I do the same thing, right? I buy real estate, I depreciate it all. Thank God for my real estate, because my tax bill would have been like off the charts, like really, really bad. But thanks to real estate, my tax bill is significantly lower. Although I still think my taxes are really high. So that's appreciation. So that's the third reason why I buy real estate. Number 4 is I can do a forced depreciation, excuse me. So forced depreciation means that I can add value to my real estate and increase the value, increase the appreciation of my real estate just from my own action. With stocks, very hard to do unless you are part of the company or you're part of the advisory board, so to speak, that affects real change. But with real estate, if I buy a piece of property for $100,000, add $20,000 of remodeling and cosmetic repairs, I have the potential of increasing the value of my real estate from $100,000 to $150,000, where I've gained $30,000 of profit. That's one of the reasons why I love real estate. I have more control. I have more flexibility as to what I can do to increase the value of my real estate. Versus with stocks, it's very passive. Right? I can't like if I invest in Apple stock, for example, I can't go to Silicon Valley and knock on their door and be like, hey, listen, I'm now one of the new owners of Apple. Let me in. I'm going to run the show now, right? You can't do that, right? You're going to be escorted out by Apple iPhone security guards, okay? You can't do that. So that's one of the advantages that real estate has is you get forced appreciation. You get to control really what you put into the real estate and the output. So that's number 4 reason as to why I love real estate. Number 5. Is that you can also do security exchange. You could do there's a lot of tax benefits in that, but real estate won't go away. It just won't go away, right? I mean, even if the whole world would be, I don't know, we're in an apocalyptic world, okay? We're still gonna live in caves, right? If that's the case, I'm gonna go buy some caves, I'm gonna rent it out. So that's the true beauty of real estate is it just never goes away, and you can't make more of real estate. Right? There's a finite number of real estate. Although China and South Korea would argue you could just carve out and build more land on top of oceans, because that's what they've been doing for the last couple of decades. But even so, real estate is a finite commodity. You only have so much of real estate. So those are my 5 reasons why I love real estate. And another kind of nature that I love about real estate is, if you have enough real estate, if you have enough rental properties, you can generate enough income to where you don't really have to worry about much, right? Things become more passive, and there's very minimal input that you have to do when it comes to generating the income. You're leveraging other people's time and effort in terms of generating income. So, if you have, let's say, 20 rental properties, that's giving you $500 of profit each. That's easily, close to $10,000 of your earning in terms of your passive income. And that's $10,000 that very little work you have to put into. Of course, you put a lot of work up front of buying, analyzing, going in and doing some value add projects. Those are all true, but over time, the return that you get in terms of your internal rate of return, as well as how much you put in terms of your time and effort, diminishes, and therefore you reap more benefit as you hold on to real estate. So that's one of the big reasons that I'm a big proponent of buying real estate. And something that Daniel and I have been talking about the last few days is we are going to see a potential great opportunity in the next 6 to 12 months to be able to buy real estate. So I've not paid attention to the comment section yet, so we'll get to that in just one sec. But big reasons why, big proponent as to why I love buying real estate, and I encourage you guys to do so as well. Okay, let's have some conversations about Danielle. I saying love you guys. Well, love you too, Danielle. I appreciate you being on here. Okay, appreciate all of you. And so with that being said, guys, buy real estate. I'm going to show you how also throughout the rest of the show, how to buy your first piece of rental property, how to buy your first rental property without even having your own cash or credit to do so. Speaking of which, if you want to learn how we did that, how my brother and I were to go from 0 to 75 rental units, okay? This book is going to show you how exactly we did it. We did it without using our own money. We did it without using our own credit. I know it sounds hokey and it just sounds very I don't know what's the right word. Scammy, is that a word to describe this? I guess
scammy is a good word. I like scammy.
Yeah, it sounds like we're lying, but we're not. Because if we were lying and we were selling this book on Amazon, Barnes and Noble, which we are, we sell this book on Amazon, Barnes and Noble. You can pick it up for $25. Or you can pick it up for free at our website, 0to75units.com, and that's down below. But if we were lying to you guys, come on, I mean, we would have been shut down a while ago. The Federal Trade Commission, as well as our state Consumer Protection Bureau, will be after us, right? That much is true. So grab your book today. It's absolutely free. We're going to show you all the strategies. And by the time you're done with this book, you're going to realize, holy smokes, I too can go and start buying rental property without using my own money, without using my own credit. It's absolutely possible. We got scripts, we got systems for you guys. It's all in this book. 290 pages worth of content, and we wrote this over the span of a year. So you're getting our year's worth of work all for free, guys. All you have to do is pay for shipping, and we'll get this book out to you ASAP. So that's down below, 0 to 75 units.com for free. You can go grab it right now. Okay. All right. Jay Aguilar is saying China is not even giving the first name home buyers like myself a chance to even get in. I'm not sure what that really means, but
so what I think he means by that is that I remember a couple years ago when we were out there, like, driving for dollars, and calling a lot of these buildings, is that a lot of these people, like the foreign investors, will hold on to these buildings and not sell regardless of how they're performing. So I feel like maybe that's what Jay's.
Yeah, I remember that. That kind of went on the wayside when I think President Trump got elected in 2016, 2017. I saw a lot less of that after 2017, 2018. Before 2016, that was true. Like if you were to come to Chicago, like all the north side of Chicago, like Gold Coast and Wrigleyville, that area, a lot of Chinese buyers, a lot of foreign money coming in, and they were buying like 3 units for like $2 million. I mean, it was insane. It's because a lot of these foreign investors, they don't know where to park their money.
Right.
They don't know where to keep their money. They can't just keep it. They just can't put it in their checking account because it's just eroding away. They can't invest in stocks. They have to go somewhere. So a lot of these investors, they just park their money in real estate and just leave it, even though the return on dollar absolutely sucks. They were buying these apartments buildings for like 0.5% cap rate. I mean, it was insane. I saw that a lot in Chicago. I'm pretty sure it was true also in LA, New York, and some of these larger metropolitan areas. But I saw a lot of foreign transaction happening in the United States. But I think that kind of went away after 2017, 2018. A lot less of that was happening. So with that being said, Sunshine Forever is asking, if you could put anywhere right now, the next 3 best markets right now, and then in 6 months. I mean, personally, and this is not even looking at where I would invest. Okay. Personally, where I would want to move right now, definitely Texas being one. Okay. If you want to specific names, I'll probably consider Dallas, Austin. If I'm looking at Florida, Central Florida, pretty much all those states that are really friendly when it comes to commerce. And also, I prefer, of course, I got to take care of my family, right? I have a daughter, I have a child, so I got to go to a place where it's family friendly, business friendly. You could just smell freedom walking down the street. Nashville is one. So those are the areas that I would prefer personally when investing. Of course, Daniel and I are already taking some action in Florida. I'm not going to name specifics unless you're one of our investors. I'll name it then. But to protect our investors' interests and to protect my investment company, won't be mentioning any names or markets. But Florida is definitely an area that we look at. Texas is one. I think Texas is still got some really good potential. But of course, there are local pocket markets that do really, really well that we probably don't even know about. So those are the places that I would go personally to move, but to invest, a little bit different story. Okay. Cherry is asking, hi there, thanks for the content. I live in the Bay Area. I've been saving for a down payment, but the prices just keep going up, and no one here thinks the real estate price will be corrected. Yeah, that's what everyone thought back in 2007, 2008, when everyone was like, oh, there's no way real estate is crashing. There's no way, right? If you guys saw the movie Big Short, everyone thought this Dr. Michael was crazy for shorting real estate, right? Who's that character? I can't remember the actor's name. He played the broker.
The Big Short.
Yeah.
Fact check.
There we go. Thank you. Nick's our professional fact checker here. Professional Jamie. But there's one of the brokers. I can't remember the actor's name, man.
Here, I'll go through it.
Yeah.
Was it Christian Bale? Steve Carell.
Christian Bale played Michael, Dr. Michael.
Okay. Yeah. We got Ryan Gosling and then
Ryan Gosling. That's the guy.
Okay.
So Ryan Gosling's character, they were in a bar with other bankers, right? Wall Street bankers. And Ryan Gosling's like, someone shorted against real estate. So that question was, who shorts against real estate, right? Who the heck bets against real estate? And that was the question, even to the Wall Street bankers who make millions of dollars in commissions. And that's happening right now, I think. A lot of people call us crazy. Some, and some people are kind of, they're not completely dismissing that claim that there could be a real estate crash just because of what we've seen in 2008. But a lot of people back in 2007, 2006 said the same thing. Like, there's no way real estate is going to crash. This market's going to keep going. Inventory's hot. Demand's hot. There's no way. There's no way. But we've seen that in 2007, 2008. They were proven wrong. People clearly, had a very rude awakening in 2008 through 2010. Really, people didn't start feeling it until 2010. If you look at the data, 2008, we were still doing this. I mean, it was still going up. The delinquency rate, the mortgage default rate was still going up like this. 2010 was when we were at the peak. I mean, it was crazy. It was nuts. So, I wouldn't necessarily say that if there were a market crash next year, people wouldn't feel it necessarily right away. I think it's going to be it won't be till a year or two after when we're going to finally see the peak of, for short sales, foreclosures, deed in lieu, right? All these things that could potentially happen. Okay. Jay Aguilar is saying, no, I'm trying to get an offer in, and there's 5-10 offers from foreigners. Yeah, that seems about right. This is SoCal, so yeah, there's a lot of foreign dollars moving in. Sunshine Forever is asking, how do I become one of your investors? So send us an email. Actually, send Daniel an email. Daniel is our chief investment officer for our private fund that Daniel and I are starting. I happen to be the chief tech officer. Right. And I get to do some really cool stuff with software and tech, which is part of my passion. So that's Daniel's email. Send Daniel an email about your interest in becoming one of our investors, doing some really cool things, especially new age of space. I just gave it a little clue there. But we're doing really cool things in Florida. So I'm excited. I'm personally very, very excited.
We're investing in Mars.
Yeah, we're investing in Jupiter. Yeah. All right, guys. So let's go and talk about how do you your first rental property. Of course, I'm going to give away some little snippets from our book, 0 to 75 units. So I'm gonna use our favorite acronym, which is the FORCE strategy. FORCE. FORCE stands for find your deals. Okay, and we typically want to find deals that are off market. And what I mean by off market is they're not on MLS, they're not listed anywhere, they're not being listed with the realtor, they're not publicly available for sale is basically what it is. So find a deal, owner finance it. So owner financing is a concept where it's a negotiated concept where you and the seller would essentially arrange a deal or a transaction where you make monthly payments to the seller in exchange for ownership right of the property. So you're going to pay the seller, $800 or $1,000 a month, just like a bank, and then they give you ownership right of the deal, and you get to rent it out, you get to collect rent, you get to appreciate it. So now you have equitable interest in that property. So if the property appreciates, all that appreciation is yours, which is great. You win big time in that one. So owner finance it, raise the capital. So we'll talk about that in just one sec. Cash flow it, it's got a profit, right? And then E, expand your empire, expand your financial freedom by scaling, by increasing your knowledge, and of course, adding more rental properties to the mix. So how I typically find the deals is I don't necessarily look for them on the MLS. That's actually the last place I look for my deals. Last place. I don't look for deals in the MLS. You're going to get what Jay is going to get is a lot of competition, a lot of bidding wars. A lot of people are like, oh, I'll pay $100,000 for it. And another seller is like, well, I'll pay $120,000 for it. Well, you know what? Screw that guy. I'm going to pay $150,000 for it. And soon enough, a purchase price of $100,000 goes up to $150,000 because there's all these bidding war happening, right? That's not what I want. I don't want to be in the middle of that, trying to bid up and buy the property at a really bad price. I want to get it at a price where I know I'm going to be profitable. I got a good return, and I'm not losing my pants for it. So I buy properties only off market that are secret. They're not being publicly advertised for sale. So now you're asking, well, Sam, how do we do that? Like, do we have to join some kind of secret real estate cult? Like, what do we do? No, you don't have to join a secret real estate cult. You don't have to, slit your wrist or anything like that. Okay, no public animal sacrifices are required. I know I went totally weird there. Nick's like laughing crazy right now.
That went down.
Sorry to scare you guys. Sorry, YouTube. Sorry. All right. But what you have to do is you got to get smarter when it comes to how to look for deals. The psychology is you don't look for deals. You look for the problems. You look for where people are struggling the most. Right now, here's a secret tidbit, right? If you guys are paying attention right now, and if you guys are writing down what I'm saying, is what I would do is I would go look for landlords that are facing an eviction problem right now. And a lot of landlords are facing an eviction problem right now, right? A lot right now. Because, of course, the CDC eviction moratorium, there's people that are just outright struggling to collect rent. They can't evict. So a lot of people are stuck without being able to collect rent or without being able to evict. So if you can, contact those landlords to see if they're interested in selling. If they want a quick out, instead of waiting for an eviction or instead of waiting for rents to be collected, that's a good scenario. Now you can go ahead and negotiate the price down because now you're buying the property as is. Sure, you're going to be the one that has to deal with the problem, but you're going to be able to get a discount. You can negotiate for owner financing. There's a lot of wiggle room and flexibility to work with those types of sellers that are highly motivated or they're dealing with higher stress with what's going on right now. Owner financing, I'm going to give you all the secret and tactics. Daniel is going to write all that secret and tactics right here in this book. It gives you the scripts, the systems, all the questions that you need to ask in the book, 0 to 75units.com. And we're not going to get into that. Now, raising capital is fairly simple. How many of you guys have watched the show Shark Tank before? I'm sure a lot of you have. I mean, if you guys are watching this show, you guys probably enjoy watching Shark Tank. It's probably a show that you love. But if you haven't watched the show, it's about a show where a business owner comes in as a contestant and they are pitching their business and they're trying to raise money from these judges, right? These investors, very wealthy investors. And what happens is they go in, contestants go in and they say, oh, hey, Shark, my name is such and so. My business is in, making alligator skin bags or whatever. I'm just making things up here. And I am looking to raise $100,000 in exchange for 20% equity in my company. So what they're doing is they're looking to collect $100,000 in exchange, sell 20% of their company to these sharks, to these investors. Well, if you guys haven't realized, you can do the same thing in real estate. You can go and find a really nice deal, like profitable deal, put it under contract so that now you have some skin in the game, and then you can go and raise capital from these potential investors and partners and say, hey, listen, investor, Mr. Investor, I got this smoking hot deal. It's an apartment building. It has a potential of making us X amount of dollars. I'm looking to raise $100,000 for the down payment. Would you like to come in as a 50-50 partner? And they'll look at your data, they'll look at and see, your research and how you've analyzed it. And if it makes sense, then they may say, sure, I'd love to partner with you. I'll put $100,000 down, and then I'll get in on the deal with you. Right? That's a way of raising capital. So even if you don't have any money to buy real estate, that's a phenomenal and spectacular way of getting in. Now, the key here is you have to be good at analyzing deals. You have to be good at finding deals. You have to be good at negotiating. All that takes education and training and to learn, right? You can't just go out in the blue and start raising money. You can't do that. You're going to look like an idiot, right? So you have to learn how to find deals, how to analyze deals, how to structure deals. All these things take not only time, but also training and of course, learning. Now, speaking of training, of course, on top of getting your book, Daniel and I do offer coaching. Not going to make a whole big spiel out of it, but if you guys are interested in learning how to invest in real estate and get coached by myself or Daniel, go down the video description below where we left a link for you to check out our coaching program. And that's the kwakbrothers.com/coaching. Again, that's the kwakbrothers.com/coaching. So that's raising capital. So you guys can see why you don't need the banks through owner financing. You don't have to go get a mortgage. You don't have to go get hard money lending. You don't have to go get bank loans to buy real estate. You can use owner financing. And then for the down payment portion, you can just go raise capital from investors and partners. They're going to want to work with you. So with those two combinations, you don't need credit. You don't need to go make a lot of money or have a lot of money to go buy real estate. Yes, you're going to have only 50% stake or 60% stake on a real estate, but that's a heck of a lot better than 0% real estate. So if you do it this way, it's a good start. It's a good way to build cash flow. It's a good way to get profit in. And what's interesting is that once you do one deal, once you get one deal out of the way, deal number 2, deal number 3, deal number 4 becomes very easy and it goes like that. Okay. And part of it also is people are going to say, wow, you've done a deal before. Hey, I want to work with you. I want to invest with you. I got $100,000. I want to be able to work with someone who's done a deal before. So it just makes it so much easier. You just got to get to that initial hump. It just makes it a little bit more easier because of that confidence, and your psyche is just that much better. So that's the raising capital part. Of course, cash flow part, you got to have good property management. You got to be able to take care of your tenants very well. If you forego the property management part, becomes very, very hard for your business to stay profitable. I've seen so many investors that got into a deal, really good deal, mind you, and a couple months later, the supposed great deal just like complete kaput. Like, that's, by the way, broken in German. So it just destroyed the deal because of bad property management. Not only were they not profitable, but they were losing money hand over fist. It was really, really bad. So you got to have good property management. Whether you do it yourself or you hire a professional team, got to have it down to the T, because you will lose your pants if you don't have good property management. Expand your empire. That's a pretty simple concept. Keep learning, keep diving into new concepts, keep going to seminars, keep taking educational courses, because that's really how you expand your business. You don't grow unless you grow in here, right? You can't grow your business without you, as the owner of the business, don't grow yourself. So you can't level up until you level up here. You can't keep on increasing your wealth and income unless you increase the level of your mental capacity, as well as the knowledge, the training, the skill set, the awareness that you have. You can't have any of that. So you got to upgrade you before you can upgrade your income. Okay, write that down. Upgrade you before you can upgrade your income. You got to upgrade your mind before you can upgrade your wallet. You got to upgrade what's in here before you can upgrade what you have in your bank account. And that's the first thing that Daniel and I did, is we put our nose down, we studied, we got educated, we went and took courses. We bought courses. We had mentors. We joined clubs. I mean, we spent a lot of resources acquiring knowledge. Okay, I sound like Ty Lopez. Knowledge, right? But I'm being serious, guys. I'm being absolutely serious. You gotta have knowledge. The difference between someone who's a millionaire and who's not a millionaire is they have $1 million of knowledge that they can go ahead and actually use. And of course, it's not just knowledge, right? You can't study the Pythagorean theorem or E equals MC squared, right? Those are great, but you got to have practical knowledge that's going to help you actually add value to your business. Okay, that's the key. So if you aren't doing that, then you're going to struggle big time. So there it is, folks. Thank you, Nick, and thank you, Hosanna. Upgrade yourself, and then upgrade your income. Right? You can't upgrade your income without upgrading yourself. I
think we got to make a shirt about that now.
We should upgrade yourself and upgrade your income. Right? Big thing. So that's how you grow. That's how every business owner grows. Right? Even today, guys, I just recently, a couple days ago, I paid $8,000 for a coaching program that's going to teach me how to do some really cool things in my business. Right? I'm always paving. I'm always learning. I'm always hitting it hard. Yes, my business made $1 million, sure, but I'm always looking for the next big fish. Right? I'm always looking for ways to increase my income, because the more I increase my income, I can go do better things. I can go be more altruistic. I can go donate more money. I can help more people. I can upgrade our YouTube channel and be able to expand our reach. Right? All those things, very important. So if you're not upgrading your knowledge, I don't know what else you're doing, right? So that means you got to stop watching CNN, stop watching Fox News, stop stop getting into drama, right? Stop watching reality TV. That's all screwing up with your head. Okay,
stop scrolling.
Yeah, stop scrolling. Learn, dive into one thing. Focus on, if your goal is to increase your income using real estate, then focus on that. Like, you should be eating, sleeping, and then real estate. Right? Eating, sleeping, real estate. That's all you should be doing if you really want to upgrade your income. And then the only way you do that is you gotta upgrade here. You gotta get the nuggets going.
We have a celebrity in the chat.
Oh, we got
Eric Hilarious.
We got Eric Hilario, man. Oh man, I haven't talked to Eric in a while, man. That's crazy. How you doing, Eric? How you doing? Dennis Repetition in the house as well. Good morning with his coffee emoji. Very cool. So, guys, that is how you buy real estate. I give you a very 30,000 feet overview. I didn't go into a specific, which we will in our channel. There's like 300 videos on how to buy real estate. We give away free content all the time. And if you're not growing your income through real estate or through business, then pretty much it's your fault, right? Because all the knowledge is right here in the YouTube channel. And it's not even our YouTube channel. You can go check out some of the other YouTube channels out there, like me, Kevin, Graham Stephan, Bigger Pockets. They give you guys free content. And yet, if you don't take action, if you don't level up, if you don't upgrade, then ultimately it is your responsibility, your fault for not becoming where you want to be, right? Not going where you want to be. That is your responsibility. So I'm going to put some fire in your butt right now. Go learn. Whether you can buy our book, you can, whatever you got to do, take action, take massive action to take on your goal. So that's pretty much it, friends, as far as how to buy rental properties. I just gave you guys all the golden nuggets that I want to give you. Let's come back to some Q&A, and let's come back to some updates for you guys. The latest news, by the way, in terms of election, is that Georgia this is about an hour ago. Georgia has now begun the audit for the presidential race. So we may come to start seeing some truth behind what is happening with the presidential race. And this is coming from ABC News. I know some of you guys don't like ABC News or CNN or Fox News, but this is coming from Biden and Trump presidential news. It looks like Georgia is going to be doing some audit, which should be very interesting to see what the final results are going to be. And of course, the report is saying, Trump is not conceding. So yeah, very, very interesting things to see. And of course, if you guys care about what's happening with the presidential election, the official calling is not complete. The actual certification as to who is the presidential-elect is not like certified yet. It's not official. Of course, the news outlets have projected a winner, but that's just a projection, right? Not a real official certified. This is the presidential-elect. Okay, so that's the latest update for you guys as far as what's happening with the election. As far as stimulus news, of course, we got a lot of people, a lot of congressmen and congresswomen, even senators are urging for a stimulus package to be passed. And now we could see something happen between December 1st through December 18th, right before the Christmas or holiday recession. But we can possibly see a lame duck session actually have some kind of productiveness when it comes to passing a stimulus package. A lot of people, of course, are saying, hey, we should just pass something right now. $1.9 trillion does not matter what it is. We got to pass it. Of course, some leaders are saying, well, it has to be the $3 trillion HEROES Act. And there's a lot of course, internal conflict happening right now as to what should be inside of the stimulus package. I think generally all the congressmen, congresswomen, and senators, they want a stimulus package to happen. I think that there's an agreement there. But in terms of what the amount is and what provisions are inside of the stimulus package, that is up for the toss. Right, that is up for the grab. So the stimulus package will probably happen. But what's inside of the stimulus package, we don't know. And that's what the main argument right now is. That's where the stalemate and the gridlock is standing. So the question is, will there be a stimulus? Yes, I believe so. But we're going to have a prolonged conversation about what's inside. Okay, which, by the way, if you guys don't know, if you guys are wondering what's happening to the stimulus negotiation, Treasury Secretary Steven Mnuchin is no longer a negotiator party. So same thing with Mark Meadows. It is now up to Senate Majority Leader Mitch McConnell as the GOP negotiating party, and of course we got Nancy Pelosi as the other side of the Democratic Party. Negotiating party. So it is up to really Nancy Pelosi and Mitch McConnell to pretty much negotiate the terms of what we can expect to see in the next stimulus package. Right now, what's up for the toss is the $1,200 stimulus package, the $1,200 stimulus check. Of course, we are anticipating some kind of state and local funding, although the GOP historically has been rejecting that idea, while the Democrats want the $1.3 trillion state and local funding. We also have funding next round of Paycheck Protection Program for businesses, possibly something for the EIDL, although the EIDL is right now is under massive scrutiny because of the fraud. I mean, every day I feel like we're seeing some kind of a EIDL fraud story of the day. I mean, there's people getting arrested. FBI has been investigating frauds with EIDL. It's just really, really bad, really, really messy. So a lot of potential new funding for the Paycheck Protection Program with some new provisions, of course. So this next stimulus package, if I have to take a guess as far as what's inside of the next stimulus package, definitely going to see something with unemployment. We may see a $300 to $400 number when it comes to the unemployment checks. This is $300 to $400 a week. And I anticipate if a stimulus package is passed in December, then I anticipate the unemployment checks to be paid out until March time period. So from January to March, I anticipate some kind of an unemployment insurance check being sent out from numbers ranging $300 to $400. We're anticipating, of course, the $1,200 stimulus check out to everybody. And for dependents, we're going to see $500 per dependent. And yes, I do anticipate the same provision as we've seen in CARES Act, where if you're making more than, say, $75,000 as an individual, the $1,200 number kind of tapers down to $99,000. If you're making more than $99,000, you probably won't be getting the stimulus check whatsoever. And also, I see another round of money for PPP, Paycheck Protection Program, and then a little bit of money for state and local funding to conduct anti-coronavirus fight. That's something that's what I'm anticipating for the next stimulus package. I don't think it's going to be a big old omnibus bill, but that could change if on January 5th, there's a Senate race in Georgia, and if the GOP loses control of Georgia, then the Senate control will go to the Democrats. Democrats will now have the majority of the Senate if Georgia all of a sudden turns blue in terms of Senate, which means that if Joe Biden is the president, House is under control under the Democrats, and then the Senate is under control of the Democrats, then pretty much we may see a HEROES Act being passed without any sort of obstruction, without any sort of limitation as to or any sort of pushback, right? So we may see a full-blown $3 trillion stimulus package being passed come January, when, of course, we have some kind of an answer or clarity as to who is now control of the Senate after January 5th. So, yeah, and they won't, yeah, that's true. They won't have a filibuster majority, which, of course, it requires 60 votes to make that happen. But little less challenge, of course, if the Democrats are under control of the Senate. But who knows? The next 2-3 months are going to be very interesting. So we'll just have to watch. So could we see an omnibus bill come January? An omnibus meaning it's got pretty much a buffet of different things in the stimulus package? Possibly. I think it all hinges on the Senate race in January for Georgia. Again, depending on the outcome of the Senate race in Georgia, we may see an omnibus bill, or we may see a scaled down version of the HEROES Act, or we may pick up on the $1.9 trillion bill that was introduced a couple of weeks ago by the Problem Solver Caucus in the House of Representatives. A lot of toss-ups right now, right? A lot of potential ideas that we can play with when it comes to the stimulus package. But personally, do I believe that we need a stimulus package? Yes and no. I do believe that we need to have a more targeted stimulus package, meaning we need to address a specific problem, not just take a broad stroke approach of just pushing money into the economy. I think there is a need for a specific targeted stimulus package than, oh, here's money for everybody. Right? Because money for everybody doesn't necessarily solve all the problems. I mean, we've been seeing this time and time again historically. But I think a targeted bill will do a better job to help the economy. And of course, we got to fight the coronavirus. Cases aren't looking good. Cases are spiking like crazy. You guys know that Nick, myself, Daniel, we were sick. So clearly, it's not getting better. So right now, two things that need to get, I think from my perspective, need to get addressed is the coronavirus. I know we have the vaccines being talked about, although only 40%, according to some polls or some surveys, only 40% of Americans want to take it, right? So vaccine is a big one. And fighting the coronavirus. Number two is, could we see a stimulus package, a targeted stimulus package? I think those two things are going to be a big major factor in the next 6 to 12 months as to how the economy will bounce and how the economy will behave and respond to what's happening right now. Although the stock market isn't doing too hot, isn't doing too bad right now. I'm going to check CNBC, and right now it looks like Dow Jones is up again, 29,378 points, S&P at 3570. So we're not seeing this crazy, turbulent crash. It's doing not too bad. We're pretty close to where we were pre-coronavirus in March. So prior to coronavirus, we were peaking around 29,500 is where we were peaking. That was the max that we hit. Where we are now is 29,372. So we're only a couple hundred points shy from where we were pre-coronavirus. So it seems like the economy is not too bad, but again, 2021 is a huge random thing, right?
Let me ask you a question, though.
Yeah.
So the whole President-elect Biden, he's already talking about having a COVID-19 task force, and they're talking about another 4 to 6 week lockdown.
Yes.
What do you think that would do?
It's going to crush businesses.
Yeah.
It's going to kill businesses no other.
It's probably going to choke out most mom and pop restaurants.
Completely. Yeah. Case example, you look in New York, a lot of the restaurants aren't coming back in New York City. And I'm specifically addressing Manhattan, to be exact. Not all parts of New York, not all boroughs of New York City, or not all tri-state area is affecting you that way. But you look at Manhattan, it's getting choked out. It's really, really sad to see Manhattan and all the business owners close. This is bad because for every business close, you're looking at an average 3 to 5 employees that don't have a job.
Yeah.
Right. 3 to 5 employees that are not getting paid, they're going to struggle. Unemployment's going to go up, and we're already seeing mortgage default rates go up. Right, we're already seeing the need for more forbearance. We're definitely going to see foreclosures. We're definitely going to see a wave of foreclosures, which again is a clue as to why I'm saying we're going to see a market crash in 2021. So if that is true, if Joe Biden is planning on mandating a 46-week lockdown, boy, that's gonna crush a lot of people. That's gonna kill a lot of businesses. It's not gonna hurt us as much, but it will have a secondary effect because there's less people obviously doing business with us because they have less money. It's just not gonna bode well. Okay, Sunshine. So I'm gonna address Prince of Golf and Sunshine Forever. Prince of Golf is saying, should I take out a Heloc right now before January 2021 or wait? I'm guessing. Yeah. So the answer is yes, but it matters what you do with the Heloc, right? It's kind of like saying, should I buy a chainsaw or not? Well, what do you plan on doing with that? Are you gonna go around killing people, or are you gonna go cut down trees? So it depends on what you're planning on doing with a tool like a Heloc. If you are planning on using it to pay off your mortgage and of course ultimately using it to buy real estate or buy businesses down the road, then yes. If you're planning on using a Heloc for silly things like going out to Vegas, not a good idea. Not a thing that I would support. Okay. Sunshine Forever is, should I take out a Heloc before January 2021? Yeah, same question, right? So I would say now is the time. Now is the time to start acting on paying off your mortgage, paying off your debt, start accumulating your cash reserve, cut down your expenses. No more Netflix, which I don't know why you still have a Netflix subscription. I'm not going to go into that, but seriously. YouTube is free. Watch the Kwak Brothers channel, right? Quit Netflix, quit Hulu, right? Quit Stars.
Don't buy that new Call of Duty game.
Right? Don't buy that Call of Duty game. That's saying, Nick's saying that. Okay.
Probably gonna buy.
Come and watch the Kwak Brothers show, right? Come and watch the Kwak Brothers content. I know I'm a little biased, but seriously, watch stuff that's gonna make you money. Okay. Seriously, like I see the same thing when it comes to financial decisions and your dietary decision. Like if eating cotton candy every day is going to give you the bad stomach and it's going to damage your pancreas and ultimately gives you diabetes, then you got to quit eating cotton candy every day, right? Same thing when it comes to your information. Stop eating junk when it comes to your information. Got to go watch, listen, read things that's going to make you money. It's going to make you a better person. That's going to obviously is going to grow your wealth. Okay. So sorry, guys. I have to do some ranting there. All right. Put money down to buy real estate. Exactly. That's exactly what you should do. Okay. Thomas Jefferson says, "Hey, someone from the dead. We got. Wow. We got. I wish it was George Washington that's not that.
Yeah, we got one of those.
Thomas Jefferson says, "I love you guys. It's funny."
Cancel Tinder Plus. He just said.
What's that? Cancel Tinder Plus. Yes, cancel Tinder Plus. No, Thomas Jefferson. No more looking at your lady's ankles. Okay. All right. No more looking at Mrs. Anderson's, under the, I don't know what's going on over there, but I don't know what those are called, but yeah, stop looking at her ankle funny. All right. Or stop looking at her collarbone funny. All right. I don't know what they looked at in 1770s, but stop looking at those inappropriate things. All right. No more swiping left to right. Right. I can't imagine what they would put in the 1770s. Like
it would be something so archaic. It'd probably have something to do with like open market stuff.
I would imagine like if I had a Tinder profile back in the 1770s, it would be like, I have the best barn in the corner. I have my milk or my cow milk, the best. I got in Virginia.
Premium wood tea.
Yeah, I got premium tea. Right.
Wood tea.
I am part of the Whig Party. I'm best friends with George Washington. Right. Like it would be something so like weird and archaic. Sorry guys.
It's Friday.
It's Friday. Yeah, we gotta have some fun. Okay, we gotta have some fun. But Thomas Jefferson, yes, cancel Tinder Plus, please. Jay is saying, sorry, all the questions, just a frustrated buyer. What do you recommend? Well, okay, let me read this. What do you recommend to me? Should I wait till that crashes? If it crashes, do my best to get it now. Right now is a great time to research, to look for markets, to have some kind of statistics ready to go. Right now is a great time to raise capital. Great time to raise capital. Great time to go learn, educate. Great time to invest in this, right? I said it earlier. Put this down in your noggin, right? Upgrade your brain. and then you'll upgrade your income. Okay, upgrade your mindset, upgrade your knowledge, and then you'll upgrade your income. All right, it's a great time to do that right now. Okay, does your book have an owner financing carry letter example? Yes, we do. We have all the scripts that you ever need. So go. I know you already bought the book. Thank you so much for doing that. But yeah, check it out. I think you'll love it. John writes saying, about to close on a single family using a HELOC as a down payment. Should I hold off on buying? Yeah, I'm going to give it to you straight, John. Very dangerous thing to do. Very, very dangerous thing to do. The reason being, and in fact, actually, your bank will probably look at that scenario, and they're not going to jive with that very well. In fact, in your mortgage application, it's going to say, is your down payment borrowed? If you say yes, then the banks are going to be like, I don't know about this guy. He's going to be 100% leveraged, right? So even to the banks, they believe this is going to be a very dangerous thing. If you're going to buy a property using a HELOC, do a outright purchase. Don't just do a down payment with the HELOC, because you don't want to use debt to buy debt, right? Even that, I would say that's taking a little step too far. I think that's pushing the limits a little bit. So if I were you, the rule is, if you are going to carry debt, if you are going to leverage yourself, one leverage at a time. Okay, use the HELOC to just buy it outright instead of using it as a down payment. So I think it's a very dangerous proposal that you're making there, John. I would not use a HELOC to do a down payment and then get on another debt. Dangerous. Okay, I wouldn't do it. That's just my take on that. Okay. Kevin Schmidt says, highly recommend you gents check out Lynn Alden. Okay, well, I guess we'll check that person out. Thank you so much for the great content. Love you guys. Well, love you too. Sunshine forever. Appreciate you being on here. All right, guys, we're gonna wrap up the show. And starting next week, we'll have some recorded content for you guys. We're gonna go back to doing some little bit of recorded content. We got some cool things that we want to share with you guys that obviously we can't deliver it on a live format. But we are going to do live every week. We're going to do a weekly live show, most likely on Fridays, to kind of close off the week, to give you guys some entertainment, to have some fun together. We're going to have a chat and conversation. So Monday and Wednesday, we'll most likely do a recorded content. And then Friday, we'll do a live show for you guys at 11 o'clock, and we'll have some fun. We'll have some dialogue and conversation. It's going to be a lot of fun. So with that being said, we're going to go wrap up the show. Love and appreciate all of you guys, as always. If you guys haven't, please do subscribe to our channel. Helps us a lot. We're really trying to grow. Our next big milestone is 500,000 subscribers. So that is our big milestone. That's a goal that we're after. One of the things that we're doing to get to that place is we are launching a show in December called Shark Tank for Real Estate. And this is going to be an opportunity where you can bring deals to us. We're going to have we're going to have a panelist. We're going to have judges that are going to judge your deal. We're going to decide whether it's a good deal or a bad deal. And if it's a good deal, we may potentially invest with you. We may potentially partner with you. Who knows? So if you guys want to participate in that, we are going to release a website page where you can apply to become a contestant. And then you can audition to become a contestant. Of course, if you have a deal, and then you guys are going to be able to come on our show, pitch the deal, and we'll see if it's a good deal or a bad deal. So it'll be really fun. It'll be a really cool deal, cool show to have with you guys. All right, guys. With that being said, love you guys. I'll see you guys next week. Have a great weekend. Be sure to subscribe and smash the like button. I'll see you guys next Monday. Take care.